Welcome to Celebrity Investing, your go-to source for insights, tips and updates on navigating the exciting landscape of personal and global finance. Please like, share and subscribe for more exclusive content. This is part 1 of Central Bank Digital Currencies, what you need to know in 2024. What if your money lived digitally? Central Bank Digital Currencies, CBDCs, are changing how we think about currency in today's economy. As digital transactions surge, many countries are exploring CBDCs to improve financial systems and provide a safer way to transact. This blog video will guide you through the basics of CBDCs, why they matter, and their potential impact on the global economy. From increased efficiency to enhanced monetary policy, we'll explore how central banks are stepping into the digital age. Get ready to understand the future of money and find out what this means for you. Understanding CBDCs. Central Bank Digital Currencies, or CBDCs, are a new type of digital money issued by a country's central bank. Unlike the cash we carry in our wallets, CBDCs exist entirely in digital form. They aim to combine the efficiency of digital transactions with the stability of traditional fiat currencies. CBDCs can make payments faster and cheaper, offering a more secure way to handle money in an increasingly digital economy. With that foundation, let's explore their key aspects in more detail. Definition of CBDCs. CBDCs are digital versions of a country's official currency. They are created and regulated by central banks, which means they hold the same authority as cash or bank deposits. You can think of a CBDC as a digital dollar, euro, or yen, depending on the issuing country. The main goal of CBDCs is to improve financial stability, enhance payment systems, and make financial services available to everyone, even those without access to traditional banking. Comparison with cryptocurrencies. CBDCs and cryptocurrencies like Bitcoin and Ethereum may seem similar since they both exist in digital form. However, they differ significantly. Issuance. CBDCs are issued by central banks, while cryptocurrencies are created through decentralized networks and independent of any government. Value stability. CBDCs aim to maintain a stable value pegged to the national currency. In contrast, cryptocurrencies can be highly volatile, with values that change rapidly. Regulation. CBDCs are subject to government regulations, providing greater consumer protection. Cryptocurrencies operate in a less regulated space, which can pose risks for users. Transaction processing. CBDCs typically have the backing of national infrastructure and can be processed faster through banks. Cryptocurrencies rely on blockchain networks, which can sometimes lead to slower transactions. In summary, CBDCs offer a government-backed and stable alternative to the often unpredictable world of cryptocurrencies. Comparison with traditional currencies. When comparing CBDCs to traditional currencies like cash and bank deposits, some differences emerge. Digital nature. Unlike cash, which you can touch and hold, CBDCs exist purely in digital form. This allows for easier transactions, especially in online settings. Access and inclusion. CBDCs could provide financial services to unbanked populations. People who may not have access to traditional banks can use digital currencies easily. Payment efficiency. CBDCs can facilitate quicker and cheaper transactions, reducing costs related to processing fees that are typically associated with traditional banking. Control and oversight. Central banks can track CBDC transactions, which can enhance security and prevent illegal activities. Traditional cash transactions are harder to trace, providing less oversight. By fitting into existing monetary systems, CBDCs can create a bridge between the physical and digital currencies, improving how we conduct transactions in everyday life. Benefits of CBDCs. Central Bank Digital Currencies, CBDCs, are revolutionizing the way we think about money and finance. They present exciting opportunities for everyone, from individuals to entire economies. In this section, we'll explore the key benefits that CBDCs offer. Enhanced payment systems. CBDCs can transform payment systems in many positive ways. Imagine a world where transactions happen almost instantly without the usual costs. Here are some benefits of enhanced payment systems through CBDCs. Speed. CBDCs can process transactions much faster than traditional banking methods. Instead of waiting hours or even days for your money to show up, it can be transferred in seconds. Lower costs. Transaction fees can be significantly reduced. Currently, banks and payment systems charge fees for various services. But with CBDCs, these costs can be minimal or even non-existent. Greater accessibility. With their digital nature, CBDCs can be accessed by anyone with a smartphone or computer, making it easier to send and receive money. These advancements can streamline not just personal transactions, but also business operations, creating a more efficient and cost-effective system. Financial inclusion. Financial inclusion is crucial for a thriving economy. Many people worldwide do not have access to traditional banking services. CBDCs can change that. Consider how they can help unbanked populations. Access to financial services. CBDCs can provide people without bank accounts the chance to participate in the financial system. All they need is access to a device, allowing them to store money and make transactions easily. Empowerment. With CBDCs, people can transfer money, pay bills, and save more effectively. This can lead to better management of personal finances and increased economic stability. Support for small businesses. Small business owners in remote areas can reach customers and suppliers more easily with CBDCs, enhancing their chances for success. By promoting financial inclusion, CBDCs can help lift communities and contribute to economic growth. Monetary policy implementation. CBDCs can also serve as powerful tools for central banks in managing the economy. They provide new ways for governments to implement monetary policy effectively. Here's how. Real-time data. Central banks can gather real-time data on spending and saving habits. This information helps in making informed decisions about interest rates and inflation targets. Direct tools. With CBDCs, central banks can directly inject money into the economy during economic downturns. This can help stimulate growth without the lengthy processes involved with traditional banking. Improved stability. CBDCs can offer a more stable financial system. By reducing the reliance on private banks for essential services, they can help prevent banking crises. In summary, CBDCs are not just a new form of money, they represent a shift in how we think about finance. From enhancing payment systems and promoting financial inclusion to providing effective monetary policy tools, the benefits are clear. The future looks promising as countries explore the potential of this digital currency landscape. Challenges and risks of CBDCs. While central bank digital currencies, CBDCs, hold great promise, their implementation also comes with significant challenges and risks. Understanding these can help us navigate the complex landscape of digital currencies more effectively. Here are some key areas where concerns may arise. Privacy concerns. One major issue surrounding CBDCs is privacy. In a world where transactions are increasingly digital, how much of our financial data are we willing to expose? Unlike cash, which allows for anonymous transactions, CBDCs could give governments the ability to monitor spending habits. This raises questions about surveillance. Will your purchase history become public knowledge? Could governments track your financial activities for control? Many people feel uneasy about the potential for constant monitoring. If CBDCs are designed without strong privacy safeguards, individuals may hesitate to adopt them. The fear of a big brother watching can stifle innovation and engagement, making it hard for CBDCs to gain public trust. Cybersecurity risks. Cybersecurity is another critical area of concern for CBDCs. As we move toward a more digital financial system, the risks of cyber threats grow. Hackers are always finding new ways to infiltrate systems. A successful cyber attack on a CBDC could lead to severe consequences, including loss of funds, system outages, erosion of public confidence. Just like traditional banking systems, CBDCs will need robust security measures to protect user data and financial assets. If not adequately safeguarded, the trust that people place in digital currencies could rapidly decline. Are we ready to face a potential storm of cyber threats? Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.